So, profit taking. This video is going to be the most important video that you will ever watch in cryptocurrency. And I know that is a big expectation, but I'm going to give you it. I'm going to talk about how subjective it is. I'm going to give you methods of planning to actually get some profit taking done. And I'm going to compare two different assets, one with history, one that's new, because there's a very big flaw with profit taking when there's a new asset, which I do need to explain. So if you're new, it would help if you like this video. Let's get it viral. Give me a viral hit, because I've never had one before. And I think profit taking is probably my strength, in all fairness. But I will talk about some of my downsides in terms of what I did in the previous cycle, which was wrong, and ways I've overcome it. And I'm going to show you what I've done. So let's talk about the most obvious thing in the room. You need to buy low and then sell high. Yeah. I often say to people, the profit is when you buy, not when you sell, because if you got a good order, the chances and probability of you getting a much better profit taking area is more likely. And I know people are going to be like on this video going, well, I've never had any position to take profit. Or you got the other end of the spectrum where they've watched money just absolutely get obliterated, leaving money on the table. So what do you need to do? First thing you need to do, get on those higher time frames. Do not look at any other time frames. Now, the one thing I will say this now, I think a lot of people will not see the bigger picture when it comes to certain altcoins and stuff like that. You will sell too early. And I have been there. I've mentioned it before. I sold VeChain too early. I sold my, what was the other one? I've forgotten it now. Cardano. I sold that way too early, right? Bought it at like 3 cents and sold it at $1.60 or something daft. It's like, yeah, brilliant return, but it went to like $3. Like, what I should have done, and this is key, and we will go through it, don't sell all your bag at certain points. Just, yeah, it's hard. Subjective nature of profit taking is different because you might have, say, $500 in an asset and you want to make more, but someone next to you might have $50,000 in an asset and have already made like 3, 4, 5, 10x whatever and already made a lot of money. Everyone's situation is different. You will get people, if you say to someone that you've taken profits and you may think, what? But some people may be in a very different position. So you got to remember that too. Like I may take profits very early, but I may have made a lot more money in terms of where my entry was and how much money you're also playing with. So that's the subjective nature of it. Anyways, the first thing you need to do, as I say, get on the higher time frames. Now I'm going to show you an example with history. We've got a cycle top and we have currently a cycle bottom. This is all you need to go on, right? So you need to look at, right, where have we been? We've been up here, clear, and we've also been down here. Where are we now? Well, we're kind of there. Now, there's two situations you can use. You can use a basic way, which is basically looking to see where the monthly closes were or the weekly closes, whatever you want to use on the line chart. Now, why do I use this? It's because it gives you some obvious levels where you cannot really miss. If you want to use candles, cool, you just got to be mindful of the wicks, right? However, the reason why I say that is because when you look in the past, if you go to the weekly time frame, yeah, it looks great. When you look to the monthly, you know, it's a very, very different, there it is, there you go, very, very different situation. Obviously the wick and the body closure, very, very different, right? Anyways, I digress. So when we're looking at all this kind of movement, it's like, yeah, sweet, cool, we're melting and it's great to buy, cool. I don't want to buy down here. This is what you need to look at, right? So you need to look at key levels of interest where price can return to. Low to high is where you want to be, not buy high and sell low, right? Now, method A is looking, zoom out and see where things are a bit congested, right? It's very, very simple to do. Just zoom out and look, right? So what you're looking for is areas where you can see throughout time of history where there's been a little bit of interest. So for example, where we are right now, you can see this horizontal ray going right the way across. This is a level of interest because we've been a level of support, we've been a level of support, we've also been a level of resistance. And again, where are we at now? Resistance. So if you were buying at 15K on Bitcoin, for example, maybe 32,000 or 30,000, whatever, it might be a good area to go, well, I might take 10% off the table here. Cool. Another one, obviously a lot higher, is this area here where we've had levels of resistance And we've also had a little bit of a fake out around this area, which is roughly around $43,000, right? Kind of obvious, but you could probably put it roughly here because we've had a rejection here and then you put it all the way through and then bosh. It's kind of obvious when you see these levels, when you're looking at them. Another level, not much higher, is roughly around here where we've had two clear rejections, roughly $51,000. And again, don't have to print it out too hard, but this obvious rejection, this level of support to the last big push, and then obviously the top. So that is the old school simplistic way of doing it. And I do agree that you should use these anyways because it's simple. But the way to get a bit of depth to it is use Fibonacci sequences, right? Because the Fibonacci will give you levels of extensions, which can give you where the hell do I go once it's above all-time high, which is the obvious question, right? So as you can see, that's quite simple. Fibonacci. You need to use the trend the right way. So you get the tool out, the retracement tool. It looks like that. It's also on this side. Fibonacci retracement. If you star it, it will go into a little task thing at the bottom. When you open it up, it looks like a dog's dinner. Certainly, if you have never used it before, it'll have all kinds of weird and wonderful stuff on it. Now, I will show you my settings. Bear with me. They are my settings, right? So feel free to copy them. Pause the video and have a little look, write them down. Most of them are default. There's some little ones that are tweaked, so feel free to tweak them. I like to have the background pretty much removed, and I like to just change the thing. I remove the trend line on mine, and that is roughly it, right? In terms of how to use it, if you're in an uptrend, you go from the low to the high, and then it's a pullback. If you're looking for the opposite way around in terms of levels of interest of the retracement, which is what we're looking at, i.e. we've melted, we want to see where can this go again, right? And we're looking for extension levels in the future. Cool. So what you do is you go from the previous high to the previous low, right? And this is going to give us, as you can see, some clarity. This gives us some levels of interest where we may well also look at. So obviously you got $30,000, which is a big structural point. You've also got $35,000, which is a Fibonacci sequence. Now, you may want to put in your strategy, I am looking to ladder out a position around this area. There's nothing wrong with you doing that. The 50% mark, bang on a level of interest. The 618 level, not that far away. Again, you can draw a box around that area. 786, not that far away. And obviously the top. Cool. Now, they're the sequences that I like to use. You can use other levels if you so wish to, like the 236, which also gets a lot of usage. However, it depends on you. Now, when we look at that, obviously, again, I talk about it. If you are planning to buy stuff with stink bids or just putting your levels in, why aren't you taking profits at certain levels? So what you need to do is set alerts at certain levels. So if you've got an altcoin, you think, wow, if it hits that level, I'll take 10% off the table. Cool. Because this is how subjective profit taking is. We may never get to all-time high again. We may never get to a point where we make big money. We may never have that point because it's an open market. It's a market that moves up and down, left and right, all that kind of good stuff, right? Which it does. Now, this is where I talk about my experience. I was too aggressive taking profit on the likes of Cardano and VeChain, where I could have made much more money. Now, what I mean by that is I had a plan, but I looked at my portfolio and went, ooh, that's good. And then I just went, I'll use that money for something else and got caught in the hype of other things. Should have done it. I should have just kept and stuck with my guns and just going to take a bit off the table here. But I went, sell all, boom. Oops. Shouldn't have done it. So try not to be like that. Try not to be too hasty. Try and have a plan. When you have a plan, you need to then know what to do next, i.e., what if we go above all-time high on a couple of your assets? Because let's be fair here, you're going to have one big problem soon. I'm going to explain it. You need extension levels because you've got levels up here which could be of interest. Now, the new extensions may be $83,000, $102,000, maybe, potentially, right? You've got to look at levels where, okay, I'm not that far out. Now, that is just why I do price predictions in terms of showing this methodology, this mechanism, which is kind of not alien to a lot of people, especially my Patreon. I talk about this quite a lot. A lot of the assets that I bought in the previous cycle did move up to new extension levels and made a lot more money, which is good to see. But there's going to be one big problem in a minute. I'm going to explain it. What if your coin doesn't have history? Well, this is where it gets hard. because the likes of this asset here, brand new, not been around for long, Casper, it's currently roaring right now, and I thought this is a great example. Now, obviously, we're on the higher time frame of like, they're just a 3-day time frame here. This is an all better price analysis where I was looking at certain levels to see where it would actually correct from and do kind of stuff. So from this high to this low to see where it would bounce to. It just kept bloody going, right? That is a strong market trend, kind of obvious. But look at where these extensions have taken us. Cool. It's exactly the same sort of thing, just on a much smaller time frame. Now, obviously, the situation awareness here is, well, where do we go next? Well, with this asset here alone, you got to think, well, you got two situations. In terms of profit taking, you've got this area here. So we've had this low, and we had a nice little pullback here, right? Into the 382, and then off we went. Boom. This area, for a lot of people, will be looking at taking profit levels. But also, it could go, who knows where it can go, right? It can go much higher. But when this does turn around, what people are going to be looking at, and this is a very, very important thing, they're going to be looking for levels of interest around for levels of support to go higher. So when you look at the previous swing, which is obviously from this one, essentially, if you're looking at it, you've got a level here and it could go a bit lower, but then you've got new extension levels much higher. Again, as I say, it gets very, very interesting when you start looking at plotting where these can go in the future. You've just got to use Fibonacci into your own mechanism, right? So you've got to utilize the previous swing instead of the previous cycle top, because then it will get very, very distorted. Because eventually, when you're just using this, for example, all the time, it's not the greatest of mechanisms because, let's be fair, this is a new asset. We don't know where this is going to go. This could really just go, well, it could keep going, obviously, but there's going to be times where you will do an asset like this and it's very, very short and compressed and the extension levels are very small. So yes, obviously this could play out very nicely, but I'm saying to the point of, well, you will get to a point where you will run out of extension levels because the time in that, you know, asset is very, very small and there's not enough data to kind of give you much of a reading. So it's good to mix two. So what I would say is this: have an overall swing like this. So obviously if you were buying low, thinking, oh, this could do well, and then obviously you're all the way up here thinking, bloody hell, this can keep going, just be mindful that maybe you might run out. But this is probably not the best example, but what I mean is you don't have like years of history, you don't have big massive cycles to play with because it hasn't been around that long, right? There's a lot of new assets that are out there that haven't had that big massive spurt. Could mean misguided profit taking levels because it may just keep going and you'll be like, what do we do? So yeah, look at the swings, look at the retracements and look at all that kind of stuff. But in terms of all that, you need to have a plan. You need to basically have alerts set. And when you're looking at the likes of BTC and stuff like that and thinking, right, what can I do with this? When can I take profits? Well, it's entirely up to you. This is a thing and it's subjective as hell. Everyone is different, so please be mindful of that. But if you are looking to buy as low as possible and take those profits as and when you need to and when you want to, but take little bits off. There's nothing wrong with being paid. Paying yourself is huge, but you got to also remember other external factors. The psychological game here is hype. When you are looking at this video maybe in a year's time and thinking back, wow, this isn't mental. Yeah, we may not go up, but we may also go much higher. When you start getting the hype and the normies coming into the market and you're starting to see Coinbase ranked #1 in the app stores, when you're starting to see people and influencers going, this time is different, it's all going to be much better and all fuzzy, warm feelings, there's probably a chance where you should be taking profit when the top is in. It's like when your friends go, oh, don't buy crypto, I've sold the bottom and all that kind of stuff, it bottomed in, right? It's the exact same for the top, right? So look out for the warning signs, look out for the hype, look out for the influencers, look out for certain things that have been said and why you should be looking at your portfolio thinking, well, if Bitcoin's 100k and it was 15k not too long ago, why am I buying this? Why am I not looking to scale out? Why am I not looking to take profit on my altcoins and maybe consolidate my position to make money to survive in this market? Because if you don't survive, you will never, ever make it. You need to build every single cycle, buy low, sell high. And if you're looking to do stink bids, as I say, and buy as low as possible, why aren't you not trying to do the opposite way around of like doing your stink returns essentially and get your money out of the market? Because your job is literally to take money out of the market. That is literally it. So yeah, if you did enjoy this stuff, let me know. I do a lot of this kind of stuff on my Patreon, essentially, in terms of like profit taking levels. If people ask, I kind of like give people a little bit of clarity of where to go. If you want to learn, check out Learning Crypto for education courses. It's still not too late to learn this market and get really up to speed with it before it really does go into a new cycle, a new bull market. Bitcoin halving is coming. There's an electro-presidential bullshit paradox thing that tends to follow with halving, which tends to make markets go crazy as well. So yeah, there's a lot of good stuff happening in this market. Anyways, video here. Watch the freaking thing. It's awesome.